Michelle, thank you for joining us today. Thank you
Awesome.
for your time and your experience and your presentation today. I'm going to go ahead and let you introduce yourself. You're going to do a much better job at that than I am. I would just read off of a paper, whereas yours will be a little bit more personal. So thank you so much for doing this today. I'm going to turn it over to you, and we'll just be right here to help you with anything you need.
Thank you so much, Tina and Lauren behind the scenes. So good afternoon, everyone. My name is Michelle Stricklin. I am a CPA and I specialize in tax. I've been in the tax world for 14 years. I started off in public accounting at one of the big four accounting firms, if you're familiar with them. And I spent about half my time in public accounting and half my time in-house corporate tax. So that's kind of where some of this experience on the water rights comes from, is working within a corporate tax department of a bigger company. And so I'm very excited to kind of share my experience with you. And I know you all are probably very well aware of the value and importance of water rights, especially here out in the West. And we're going to talk more about that today. So I am going to kick off the slides. Tina, I'm going to get started on the presentation and just move forward. Is that good?
Absolutely. Go ahead.
Yes, yes.
Wonderful.
Sorry, I was trying to unmute. Sorry about that.
No,
Yes,
that's
yes.
fine.
Thank you. Thank you. Go right ahead. Thanks, Lauren.
All right, everyone. So the topic is the hidden balance sheet beneath the basin. So we're going to talk about financial strategies and just understanding how to kind of view water rights in another lens. All right, so why are we here? I think the most common view of water rights is from a legal perspective, and this presentation is going to talk about them as financial assets and how to value them and what they're worth and how to put them on your balance sheet. So I think most people come from it on a legal perspective of here's like the documents and what they are and where they're located. So we're going to talk more about the financial aspects of them and the benefit of viewing them as a financial asset. All right, that's a little bit about myself, and I already shared. I'm the founder of Meliora Consulting. So that's a firm based here in Reno. That is my firm. We are just a tax advisory firm. So water rights is something that has come up in the past, and so I figured a presentation would be helpful. So thank you for your time today, and I look forward to kind of sharing the next 45 minutes and some Q&A with you. So here's a roadmap of our conversations. We're going to talk about kind of how water rights can be a financial asset, how to value them. There's like different methods, how they are presented on your balance sheet, some of the ways to mitigate risk related to your water rights, how to use them, some examples, and then an action plan at the end. All right, so we're on section 1. So kind of why they behave like financial assets. So water rights have traits of other types of assets. So, like an intangible asset or goodwill, we want to kind of think about them in kind of the same bucket, right? They can produce cash flow. They have a value, and that value does not stay permanent over time. They have a lifespan. So, in those legal documents for water rights, right, they have a term, either, uh, several decades long. These are really long lived type of assets. They have ownership and they can be transferred. And I know that's kind of where some of the value lies. And a lot of the water rights in different areas, the ownership, depends on who had them initially, and documentation is going to be important, right? Because if they're long lived, it's not going to always stay, in your files so easily. You want to make sure that you have the documentation and that we're reviewing, the value of them every so often. So we'll be talking about kind of all those different aspects in our conversation today. Okay, so this is where water rights kind of have a different lens to them. People don't always think of them as a financial asset. we definitely understand them from a documentation perspective, right? We have the legal documents, we have ownership, transferability. We manage them from, how much water can I use, um, where the water rights are located. But in terms of like the financial characteristics of water rights, they're either like documented, right, when we first receive them, and then they're not updated, they're not reviewed. So this is where opportunity lies, is, there's value behind the water rights, and, they can sit either invisible on your balance sheet. You don't want them to, right? Because an asset on your balance sheet has multiple purposes, right? They can be collateral, they can produce income, they support your financial position, which your bank is going to appreciate. So that's the benefit of kind of viewing your water rights in this lens. This section is about valuing them. So now we've talked about like the benefit of doing that. How do we do that? So there's three common approaches, and this type of, we take these types of approaches on other assets. It's not unique to water rights. So there's the market approach, and that looks at like comparable sales, almost like if you're looking for a house, right? And you look at comps in your area for other types of houses, 3 bedroom, 2,000 square feet. That's the market approach. The income approach, and this is going to be something that's going to resonate with like finance background individuals, is a discounted cash flow. So, how much income will the water right produce over time? And that one's, you're definitely going to want to have support for, what the cash flow can produce, because you're going to have it be tested, you're going to review it. So you're going to have support for how that cash flow will change over time. And then the cost approach, which also can be highly subjective. And that's going to be important because you're going to want to have to defend like the value. If you put $1 million on your water rights, probably a lot larger than that in terms of value, you're going to want to test that and then support it. Then the better you do the testing and supporting, then your banker will appreciate that. It's going to be a better identified asset on your balance sheet. Okay, so how to identify the value in your water rights and what item drive the value in your water rights. It's going to be a variety of things. So like location obviously is going to be probably the first one, and then the priority date, like is it senior, or call it junior, but senior priority rights definitely have higher value. They're going to get, the access earlier than the junior ones that are, acquired at a later point. Um, the use type, so this is going to vary in terms of how you value it. Like, is it a municipal water right, agricultural right, if you're going to use it on a farm, or industrial, like if you have like a data center, I think that's really common, right? Or if you're kind of outside of a municipal zone, I think some of the area down on 80 in the industrial park, they have, different water rights situation because it's outside of the municipal zone. You're also going to have the ability to transfer, the more you can that easier ability to transfer a water right, the higher value it is, right? If you can sell it or to someone else, I mean, that's going to impact the value. Reliability, so that's also going to go into that like cash flow projection of how much water you'll have related to your rights. And then the regional demand, which that's an X factor that's going to be pretty variable, as we all probably have experienced. Okay, so something to just keep in mind is assets will have a market value and an intrinsic value. Again, of these concepts are not unique to water rights, but just this is how you're going to view it as like a financial asset. These are the items to consider when you're documenting and supporting what the value is for them. So the market value is what like a third party buyer would pay. So like if you're selling your house to a third party, someone you don't know, not related to, that's going to be your market value. Intrinsic value is what you value it. So if it's really important to you, it's been in your family for a long time, it's historic value for you, that's an intrinsic value. And typically your market value and intrinsic value are not going to be the same. So if something is worth more to someone else, like in the market value to a third party, that's where potential opportunity. But you definitely want to make sure that that's documented at market value. Okay, now we're going to talk about water rights and kind of where to find them on your balance sheet. So this is identifying the location of your water rights as an asset on your financials. So water rights are an asset, and on your balance sheet, you have assets, liabilities, and equity. Assets, it's like a bank account, a house you own, a building a business owns, equipment, property. In that group of assets, your water rights can typically be bucketed with an intangible asset. Another example of an intangible asset are like goodwill or like patents. If you develop the IP for like software, that's also going to be intangible. So that's where you would bucket water rights on your balance sheet. They are, at least on the like your general accounting rules, they are long-lived, so they're not amortized. They will just sit there. So if you acquire your water rights at $50 million, they will sit there for $50 million. You're not going to depreciate, you're not going to amortize them, but you will review the value for impairment. And so that's very similar to how we treat goodwill. So for example, if you purchase a business and that business was valued at $50 million, you really wanted to buy that business, right? Because it enhances your business. It will sit there on your balance sheet year after year, but you do have to review it and see if that value stayed at 50 million. So that's the accounting side. The tax side is different. So this is where there's like a beneficial treatment for tax reasons. And of course, it's built into the tax code because if something is beneficial from a tax code wise, it's meant to encourage behavior. So on the tax side, water rights can be amortized, and they call it a 197 intangible. You're just going to want to remember that you can amortize them. So the value will go down over time, and you'll get a deduction for amortization. In some cases, it depends on the transaction and how the water rights are acquired. They could be like part of land, and so that's going to sit as a different category on your balance sheet. So land is not intangible, it also just sits there on your balance sheet. So just note that if that could happen, it just depends on how they were acquired, and it's going to be in your legal documents. Okay, so we're going to drive the point home of why it's important to, one, value your water rights, and then two, post them on your balance sheet because it enhances your asset value. An important component of having like more assets on your balance sheet is a debt to asset ratio, which a banker is typically going to look at. They're going to say, if you have too much debt on your balance sheet, we don't want to loan more to you. It could impact like your loan covenants, your debt covenants. So if you have a 30% debt to asset ratio, so if your loans over your assets is 30%, that's a really common ratio that bankers are going to want to not have not increase over that hurdle. And so this is a good way to kind of ensure you have a good debt to asset ratio. It's going to help, obviously, with lending and buyers. It's a beneficial impact to your overall net worth. And net worth is measured in assets minus liabilities. So I mentioned in the slide before, so if the water rights sit on your balance sheet, right, at a certain value, for the accounting side, they don't depreciate or amortize over time. However, you do need to review them for impairment. And so that's basically like an annual analysis of, hey, is that $50 million that we acquire those water rights? Does that make sense? If I were to, sell this on the open market to a third party, would they value it for $50 million? If something were to happen to that basin, right? If there were, a lot more water rights that were issued and people are drawing on more water and the basin, the overall like ability of the water to be used goes down, that will impact the value of the water rights. So that would be an impairment, right? It's not the value is not the same. The value is impacted. So this is something you want to just keep in mind, right? If there's like heavy droughts, consistent droughts that are affecting the value, you want to consider that when you do that annual impairment analysis and make sure that you are documenting and kind of reviewing through the year. Because if not, you don't want to have your $50 million asset get written down to 20 million because that is a big impact to your balance sheet. Okay, we are on section 4. So this topic is risk management and financial stability. So for risk management, we're going to talk about like modeling, and then how to minimize the risk related to the modeling as well. So drought risk, that's just one area that really impacts your water rights, right? We've seen a lot of news articles probably about this topic, and I think it's something that is on top of mind when it comes to water rights, and it's very easy to worry about it and then not kind of have any action or numbers to think about how that risk impacts the water rights. From my perspective, putting numbers to something, I think gives it a good context where you can review it and it's slightly more independent and neutral than thinking about it and worrying about something. So once you put pen to paper and you think about like, write down the risk, write down how the, numbers are impacted, right? By we've had X amount of rain and then the amount of water that is produced in a basin. This is kind of, it's a personal, sometimes you can have emotion getting into this, but putting numbers to paper and then you can adjust it year to year, you can review it, you can add your numbers based on the production for a specific basin, right? You're going to want to do this for like all of your separate rights, not like one big bucket. Make sure you do this for multiple years. And once you get into the habit of doing this, I think it gives you like a good cadence for, okay, this is where, this is the position for the water rights, this is where we're at. We can analyze and we can make a decision. Like if, we're seeing like a big movement, right, in terms of, okay, this basin's experiencing more drought like year over year. This type of scenario analysis will kind of either one pop out sooner and you can either make this, it will enable you to make decisions, and it just gives you more confidence in terms of reviewing your assets from like a financial perspective. We're going to go through an example of like how to calculate this as well. This is an important area as well where you have a lot of different people who kind of can touch water rights, right? You have like maybe your attorney, you have like an engineer, and then maybe your financial analyst. This is a really common point where you're going to have different perspectives and professionals kind of working on this type of topic. So you're definitely going to want to reach out to like your engineer, get the documents from your attorney. So this is like a multidisciplinary area. Okay. Now we're going to get into some more like concrete examples. So many people probably have experienced the kind of regulatory side of water rights as many other assets. I've been in the oil and gas world. I was at a public oil and gas company for 7 years, and water rights actually came up in many transactions. And every state has different rules, especially with states that have more activity, right, for water rights. Out west, oil and gas will have a lot of rules related to production and the usage of water um, when you're trying to produce oil and gas. So there's many layers of regulations that like a state, municipal, basin, right, can have like state kind of impacting all of these the same assets. So it's important to identify kind of all the regulations that could impact and then and monitor them. And that's like that's a ton of work. I know. Um, I think just monitoring and keeping up to date is important because one, that will impact the value, right? That's the impairment. It's going to impact the value, and it could impact like the flow, and ultimately, it's a financing decision, right? If you're going to like keep the water rights, how you're going to use it, how it impacts your cash flow. But then the regulatory piece is going to impact it from um, I'm thinking of like if you have all these new like ESG rules, like California has their new environmental reporting rules. It's important to kind of just be on top of these things. I'm sure people on the webinar understand, the authority that like the Nevada state engineer has to like appropriate water resources, right? If there's anything needs to be like reallocated. So the one that comes to mind is like the Colorado River Basin. There's been a ton of like news articles about it, how, there were some previous guidelines, I think, in like 2007. And then I think the 2026 guidelines, they're in draft format now, but they could impact like the value and how much you get to use. So just pay attention and keep a monitor on these things. I think that conservation funding area, that's something you can keep an eye on. In terms of you have a patent, I'm trying to give you like a analogous example. When you have, oil and gas international operations and, the OPEC is updating how many barrels of oil are being produced, that will impact, right, like from your how much you're going to be able to value your asset, how much you can sell or transfer. And so these types of regulatory pressures that are impacting water rights, these are all areas where it can impact the value. So just document and monitor is my suggestion. Alrighty. This is kind of newer in terms of the water right area is using water rights as like a collateral because it is an asset on your balance sheet. So from like a traditional insurance perspective, you're not going to be able to insure your water rights. That's not really a thing that banks are going to want to do. Um, However, you can use like a special type of like insurance vehicle against, for your water rights, but also since they are in your balance sheet, you can view them as an asset that can be um, utilized. So we're going to come up on that one in another slide. But the barometric insurance, it's like almost like a hedge because of the impact we're seeing of like snowpack and reservoir levels. These are just options because like any asset, you're going to want to hedge against it and possibly ensure the value. So again, kind of my example is like oil and gas. There's a lot of hedging when it comes to it because the pricing is so dynamic. Water rights are such long-lived assets, and they're, multi-decade long, and the like, more intangible aspect, right, of the, you can transfer them, um, but there's a lot of impact, right, environmentally, how much water is available and how much you can use. So there's the concept of dry leases, and that's something where you'll want to explore and view if you can have like alternative arrangements related to securing the water rights when there's like a down year. Um, and so a lot of these are just like novel developments, or they're kind of building off of existing ideas. So this is kind of like a pretty exciting part of the water rights world. But then remember that, all of these are impacted by, seniority, and then the, jurisdiction wise, like where your basin, which basin is applying for the water rights. So again, that's kind of how you think about it, is like, the ownership, and then the seniority, and then where it's located. Okay. Now, this is where I've had more experience with on the tax side, working with my clients, is like the strategic use of water rights. I think I hinted as water rights as collateral, and that's going to differ, bank to bank, but it is, right, a impressive asset that's on your balance sheet. It's not a small item. It can be pretty highly valued in terms of, the basin and the seniority rights related to that. The important thing is you're going to want to document it. Um, no one's going to believe you have a $50 million water right sitting on your balance sheet if there's not great contemporaneous documentation to support that. The upside, right, of having this high value asset on your balance sheet is that it's beneficial to your debt to asset ratio. And that's going to be really great for like when you're talking to a banker, getting loans, and then the net worth of like a business. So, in terms of a farm or a industrial business, if it owns water rights, I mean, this just makes it more attractive from like an overall valuation perspective. So if water rights are owned by a family or an individual, which is more common out west than probably people think, there's a lot of strategic opportunities here. So there's the concept of the value of the water rights. So I'm using that $50 million as an example kind of throughout the presentation. So the $50 million, say that, is owned by, grandparents, or, acquired many, many years ago. And so when that grandparent passes, and he or she owns $50 million of water rights, that asset gets stepped up to the value at the market value at the time of death. So say that 50 million was actually 100 million in the eyes of like a third party buyer. That is an incredible asset that you're going to want to use strategically. Sometimes you can put water rights like in a trust. You can put them in different vehicles. So this is just like a long-term planning opportunity, and you're going to think about, right, because multi-decade long ownership terms. You're going to think about, who's going to own it down the road, if it can support, value within a business, or if the goal is to, have them be sold, realize the money, and use that for other purposes. So it's important to kind of identify what the long-term goal is for the water rights. You want to hold it, maintain it in your family. Potentially you want to look at like a trust structure. And this is an area where you're going to want to talk, with your attorney or CPA or both, and just be able to, do some long-term strategic planning. We're going to go through a couple case studies, and this is going to bring the point home in terms of the like seniority that I've been talking about. So the value of water rights, and this is from the agricultural lens, the value from the seniority versus junior rights is very impactful. Um, so let's go through an example. We have two adjacent alfalfa operations. Just imagine they're in, uh, Nevada basin. So it's like the same crop, similar, just like same amount of acres that they own. They're both producing the same thing. Operation A has senior surface rights, senior water rights that was acquired like 100 years ago. Operation B is a newer one, right? Newer business. They acquired their water rights maybe like 40 years ago. The difference in the value is enormous. It's huge. And I'm sure many of you have maybe experienced this or have heard this from someone is just the seniority, right? Be able to have the priority access makes a big difference. And that's going to translate into the value that it's going to show up on your balance sheet. And so that $50 million that I was talking about, I mean, it could be 50 for the senior water rights, and it could be like 20 million for the junior water rights. And you're going to measure this based on like acreage. So that's how I've seen it. I'm sure there's other ways as well. Alrighty. So as we've mentioned, right, water rights have a long time horizon, multi-decade long. And so that's important to think about it in a strategic way. So don't do like a 1 year estimate or 1 year of like this is operational use. This is how much value it creates in 1 year. You have to think about it like from a long-term perspective. And so this is like a more municipal example. Um, I know the Southern Nevada water strategy, they've been uh, planning on like a much longer time horizon, and they treat it like as more of a important infrastructure, and it's like a critical piece for planning. And so it's not like this one item on the side that, maybe you give some thoughts to. If you build out like your roadmap and incorporate it as like a critical element in like your budget, right? If it's an asset, if it's producing income or cash, you want to incorporate that. You'll have a more holistic and more accurate plan. So that is our case two. And then our case three, which I have experienced, it impacts decision making. Water rights can impact the location of where someone buys land, where it sets up a business, and a lot of things will dovetail from that type of decision. So it's a pretty big deal um, if someone's going to build a huge like a data center, if they have the ability to access water rights and especially more like senior water rights, then they're going to build a huge facility. It will add jobs. It will also impact the environmentally the location that it's at. Um, but just be mindful of like the ability that water rights can kind of impact this high level decision making. I think we've seen probably a lot of growth over on, I-80 in the industrial complex. I know water rights has been a big factor in some of those decisions over why it's kind of viewed as like a hotspot location. And so to some extent, right, you can't value those types of, tangible decisions. But it is important to be able to, one, think about it as high level, like could impact the location. And then two, the value of, how that can drive the value of your business, right? If it owns water rights in a certain location, and at that location, a lot of businesses are moving there, the setting of shop, that will also increase the value as well. So just keep that in mind. Um, you also can use this information to decide how to use the water rights. So I tell clients who have them, sell, hold, lease. These are big decisions that you can make. And these are all the optionalities. And so there's strategic uses for your water rights, and then being able to put value to each of those different options is important, so that we've already talked about, how to value that. But that's how you can, one, make a decision about it. And then two, um, gives you kind of the examples of how you can put that into your like roadmap. Okay. This is our last piece. This is our action plan. So we've talked about identifying all the water rights, putting them on your balance sheet. So one, make a list of all of them and all of their components, all their features and details, right? You're gonna want to pull all the documents, the legal documents related to your water rights, and then value them. So it's definitely better to get like an independent valuation for them, and you can kind of maintain the documentation going forward. But a third party or a qualified appraiser is going to be much more highly valued than I value these water rights at $50 million. But that's going to be hard to defend, especially if were to be like in an audit, or if you're going to submit like a business for acquisition. So they're going to ask for, hey, where did you get your valuation from? Three, okay. If they are on your balance sheet, remember you're going to have to do the annual impairment testing. And all the implications that come into the impairment, right? When we talked about the regulatory environment, and then the strategic uses. So on the balance sheet, they're typically going to sit as an intangible asset. You're going to review for impairment, and then they have a different treatment for tax. So please talk with your accountant or CPA to make sure they're being accounted for accurately. And we're going to have another discussion about kind of the unique tax treatment, which is incredibly beneficial in a later date. And then fourth, we're going to model it out. So in your financial model, right, you have we have just for any business or from an individual ownership perspective, think about your whole big picture, all the assets you own, income that they produce, and then you're going to stress test. And so that's what the like drought modeling, regulatory modeling, right? Say your water rights are in a specific basin and they there's a change in the ability or availability of the water rights and usage. So that's kind of where you're going to do your stress test in your financial model in step 4. And then step 5, this is that like long-term time horizon, multi-year roadmap. So think about what you want to do with it: buy, sell, hold, lease, review the value. Is there going to be cash flow impact? Are you generating like X amount of cash from the water rights? Are you utilizing it to support other areas of your business? Incorporate that into your strategic plans. Those are the 5 steps for the action plan. That's probably something that will take a little while, but once you get into the habit, this is awesome to do. I have a couple templates, so if you're interested in just making a list, reviewing how they're treated on your balance sheet, I have just like a checklist you're going to want to go through and double check, are they being accounted for appropriately? You can feel free to send me an email to get those. Okay, in summary, hopefully I think the second to last slide. I just wanted to present water rights in a different lens, right? There can be a valuable financial asset on your balance sheet. It's important, like any asset, you're going to want to document the value and review that value every year under impairment, and then actively manage those water rights. They're assets and they can be used strategically for your business or at an individual level. Remember, we talked about the multi-generational planning. And so there's a lot of lens that you can review your water rights, but this is the financial piece. And there's just more to it than most people kind of give them credit for. Okay. Thank you so much for your time today, and we have time for questions. I just want to say thank you to the Nevada Water Rights Association. Thank you to Tina for having me speak today. So, Tina, if you want to open it up to questions, we
I
should have
do.
some
So I
time.
have one that just was typed in. Once a water right is classified as a non-cash impairment, can it be reclassified again as an increased value?
Typically, when it comes to assets that are intangible, you don't increase the value. Impairment is always going to be like a downward. So if you review like different companies' 10Ks, like their filings with the SEC, there's going to be a section for impairment for intangible assets or assets on the balance sheet. Goodwill is a really common example. You don't typically do upward reviews for your intangibles. So that's why it's really critical to do the impairment analysis. And you want to be thorough in your documentation because you don't want to drop the value down too much. And so just be mindful about how you do that impairment analysis.
Does anybody have any other questions? Michelle Kirk says, thank you for answering that. I don't see any other questions typed in. Just look at here really quickly. How do we get a copy of the slides and recording? Well, Tim, I was just going to tell you that. So give me 1 second and I'm going to ask Michelle, what is M&A multiples?
M&A multiples. So say you have a business, this is going to come from like a private equity perspective. They've been active in like the HVAC businesses and veterinary office businesses. They're going to kind of pool specific industries based on the multiple. So if you're in like a vet business, and this is really common for accounting firms as well, if they've been gobbled up by PE, they're going to say, okay, accounting firms, their revenue is about $10 million. Typically 1 to 1.5 times that will be the value. That's how much we'll sell the business. That is an M&A multiple. If you have really high value assets on your balance sheet, that's going to impact the M&A multiple in a favorable way. So, and these, I mean, it's not common, right, to sell businesses with like lots of water rights. So it's highly unique. But that's kind of the example of my interaction with M&A multiples is, accounting firms are going to be like 1 to 1.5x of gross revenue. Yeah, that's a good question because that's ultimately, if you're going to sell a business, the M&A multiple is going to be a strong piece, and this will play a really big role in the M&A multiple.
Thank you. Thank you. Do we have any other questions? No raised hands. So Tim, to answer your question about the slides and the recording, so the recording is going to be uploaded onto the End of Your website.